Hello and welcome at Stocks Advisor channel. Here at our channel we are looking for interesting buy opportunities for US-based stocks. In today's episode we will talk about Pershing Square Tontine Holdings, ticker name PSTH, traded at New York Stock Exchange. Well, what is remarkable to note here that indeed PSTH was declining from mid of February, but now we see very strong signs of recovery coming, of the major recovery. Of course, with still some volatility possible, but it looks like we are really about to pierce higher, and the reason for that moving average 20, this green line, you see it's bending upward slightly, and also we are observing secondary wave to be starting at MACD. So after this, we could have two major kind of patterns here. Both are bullish. One is immediately bullish, meaning that we can pierce immediately at these levels. Actually, we can immediately pierce from these levels higher, and then at least first level to test would be moving average 50, the blue line, which will be the first resist level, making at least 10% or almost there, and it might even break higher. And in general, let's say for midterm traders, the expected levels are to come between 30.21 and somewhere around 28.02. So this is the midterm expectation to go to make profit, and this is the first scenario. So second scenario is we still will finish this upwards wave similarly to what was here in time period from actually beginning of April all the way to mid of April. So this wave, we can make a second wave, and then we start to recover finally. So this could be a little bit delayed scenario, but in both cases these are very bullish. So in order not to lose time and not to lose an opportunity, we need to start buying already. And the best way to approach here would be to buy within the current levels. So the current levels therefore would be 23.69 and actually 24.37. Let's make it here as a note, as a call out for ourselves. So 23.69 and 24.37. So this is the first level to buy, and here it is based on the discussion that the first scenario will work. So we are going to break, but it will be seen tomorrow, because if you look after hours situation, it's slightly positive. In general, it's indecisive because we're trading almost a similar price, so it's unclear how the market will behave. Most probably we will have a series of dodges formation like we saw previous days, and we will see if we go to continue the wave downwards or we pierce the moving average 20. So once the moving average 20, the green line will be pierced, it's a clear indication that the final recovery is there, because we see also overall deceleration of decline. So this was a decline, let's say bottom, and if you look at the decline channel that was taking place also a couple of months, here you see, so this was the first channel of decline, and then it went to, let's say, slightly less, not that fast, let's say, channel, this one, and now what we see, so it was this one, and now what we see, it's kind of bending. So you see declining channels are bending. Even if we form this last wave downwards, it will be even a smaller slope, and therefore then we should have major rebounds, and therefore it's very nice indeed to watch this position, this stock at the moment. So this would be the first level to buy. If indeed we go to finish, we are going to finish this wave downwards, I mean we just need to prepare buying at the end of this wave, which will be between the levels 22.91, and the lower part should be somewhere at about 22.15. So we can write it again, 22.15, and the higher part is 22.91. So let's write it as a call out for ourselves. This will be the second level to buy in, meaning that the first one is immediate recovery, second one is just, let's say, delayed recovery, but both cases are very nice recoveries are expected Again, with the first test level being moving average 50, and the second midterm expectation being the channel between 28.02 and 30.21. So this will be, let's say, the technical way of playing. Still, what we need to keep in mind, and actually to mitigate risks, to keep some funds to average down if we go there lower. It's not expected at all at this situation, but it's always nice to keep some funds to, let's say, average down if needed, if there is negative catalyst coming in. This is also part of our routine advice. Always mitigate possible risks due to a negative catalyst, which could be in the form of news, in the form of global market situation whatsoever. And in this case, it will be just the level below 2160, meaning that anything that is below 2160, you can start buying again, and actually you can just keep some funds. We can write it here like this expression. So anything that goes lower than this one, you can buy again for rebounds. And then speaking of rebounds and taking profit, in this chart we would advise taking profit from 10 to 15%, and this is indeed a strong advice. So take it once you can, re-enter if needed, check other opportunities also at our channel. You can find many videos, but really do it, because this is important to take the profit and start again, let's say, make profit again. Don't try to become rich from one trade. This is not possible, and it's a general recipe for actually disaster. And with this being said, that's actually all for PSTH. Very nice stock, finishing the major decline, going to basic levels, and soon to recover. Of other interesting parameters here, you can see that RSI is slightly improving, although still might do some volatilities. MACD1 histogram is going to have a secondary wave. If it will break and go lower, it would mean we are going to the second level. If it continues making third wave here, then it would mean that we rebound immediately from the first channel. And as always, our levels are about non-linear buying, non-linear averaging down. What does it mean? It means that the funds you would like to play here, you can split in 5 portions, and you can buy with 1 portion in the first channel, you can buy then with 2 portions in the second channel if the price declines, and then you can buy lower than 2160 if there is negative catalyst with remaining 2 portions. This way, it will be the best optimization of profit versus loss, and you won't need to take loss here. So you don't do stop loss approach. You just wait a little bit longer, but you still exit with a profit, or at least with a minor losses, similar to actually tax rates for trading at the stock market. So with this being said, this is really safe. You can see many videos at our channel. Also, I really ask you to do it. In a sense that you see price slightly declines. Many people say, oh, I bought higher, what shall I do now? And they didn't follow this advice on keeping funds for non-linear averaging down. So they had to cut their losses. But if you do it, if you do follow it, you buy lower, then it's funny, but the worst it gets for others, the best is for you, in a sense that you can buy more at the lower level. So you really prepare yourself to mitigate all risks, and once all risks are mitigated, what remains for you is just taking the profit. So it's more patient play. It's more about being, let's say, calm and knowing what you do, but it's also very profitable at the end. So with this being said, good luck with PSTH. Please don't forget to subscribe to our channel. If you're first time watching this video, press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.